I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Thank you so much for being here. Great to have you as always.
Great to be here, Charlotte. Thank you.
Really good to be catching up with you, especially because you're coming to us live right now from Beaver Creek. So I thought that's a great place to kick it off. And I know you're only a couple of days into this event, but can you give me a sense of the sentiment conversations that are happening right now?
Sure. Yeah. So as you know, I got into the conference business 2 years ago. And even though I'm in the business, I feel I'm ranked second in the US, next to Misha and Jessica. They do an amazing job here at Beaver Creek, Colorado. It's my favorite conference. This is where I started my business 6 years ago. I literally was presenting in 2019, and I had 3 CEOs come up to me afterwards and say, John, you have a lot of passion for the space. You obviously know what you're doing as a portfolio manager. Would you ever consider being a consultant for our sector? And literally, like a light bulb went off in my head, and I left my job the following Monday and started Feneck Consulting. So I had no clients, no idea about the landscape really of the consulting in this space, but it's so much fun to help clients, not only retail clients that are buying stocks, but also get to know the companies and see what their challenges are, because working through those challenges and now seeing some of those companies really thrive is something that I get a lot of enjoyment out of. One comes to mind, I'll just mention real quick, is Power Metallic, PNPNF in the States, PNPN in Canada. I had dinner with Terry Lynch last night, the CEO. Terry and I met through Eric Sprott, I guess the fall of Beaver Creek, 2 Beaver Creeks ago. And we didn't start doing anything together about extinguishing his short sellers until probably 2 or 3 months later. But I remember Terry distinctly telling me, at that time, man, I'm putting in so much effort into my company, and I've put so much money personally into the company, which is really what you want to look for as a shareholder, is people that are, bootstrapping the company maybe 2 years ago, but have now brought in Rob McEwen, Robert Friedland, mining Hall of Famers into the stock, and they just raised $50 million, a number of months ago. So to see a company transform from 15 cents when we met to $1, literally $1 on the nose as we record this, a 6-bagger in 2 years, that's like exponential money and life-changing money for some people.
I think that really shows the value of attending events like this. So excited to hear more about that as the event progresses. But let's get into what's happening in the markets right now. I think it's a good time to get your overall take on the US economy right now. So much going on, and then we'll move over to gold and silver after we hear your thoughts on that.
Yeah, sure. And apologies to the listeners. Usually don't record from the road, but I like recording with Charlotte and INN. So the macro piece for us, I just presented here yesterday at Beaver to a full room, over 100 people. I was with Don Durrett, my YouTube partner. We record the Feneck Commodities Report pretty much every week on YouTube through Investor TV. And we did our live show, 50 minutes of just back and forth. Half of that was macro. And we were talking about August 1st as being really an important day for the US, in that job growth has been talked up by Biden and into Trump, right, as being very, very strong in the last year to 2 years. August 1st, you saw that that's not true. Maybe it was true, but it's definitely not true anymore, because what happened August 1st was we missed on non-farm payrolls, but then we revised down the previous 2 months. And by revised down, you guys can go back and look. It's 258,000 jobs off. This is not like a small revision. This is a major, major revision. And I've talked to traders that day that said people were just clamoring to get gold and silver exposure, and the exchanges were getting pretty short. Now, I don't know if that's accurate. I only talked to 2 people about that, but what you're seeing since August 1st is a real move in gold and silver. I mean, silver was well below 40 then, if you remember, and it cracked through 40 recently with authority and hasn't closed below 40, which is amazing to me, ever since. But very happy considering we have a lot of silver on the books. So August 1st was the first piece. August 22nd was the second piece. Jackson Hole, Wyoming is where Jerome Powell speaks every year. It's a major event. We always tell clients this could be good, this could be bad. You know, I mean, when he speaks outside of his norm, you got to watch that because it's not always prepared comments, right? Like, you know, he could mention something to someone. I've seen this happen with Yellen back in 2016, and the markets really react. But he actually acknowledged what I just said, that the August 1st jobs report was pretty dim, and the market picked up on this. And so the broad market got a bid, and GDX and GDXJ got a bid alongside of gold and silver again. So now we're seeing GDX literally at a 10 plus year high. GDXJ doing very well, but if you look at a 20-year chart, GDXJ is trading around 84-ish when we record this. The chart long dated, I think it's like 170 or 179 was the high, like back in the 2010-11 rally. So that's what's really exciting to me, is that we got the question on stage yesterday, is this rally over? And we were like, no, like the junior market is just like, it's probably inning 3 of 9. Like it's definitely, more mature in terms of a rally than people think. Because if you look at the charts, the real low for us was September of 22. Like, this isn't like, 2025 news that GDX and J are breaking out. To us, that's where the low was made. But it just shows you the upside potential in something like GDXJ. So that is our second largest holding. GDX, I think, is our fourth largest holding. So, we use those as core holdings and we build around them.
So we have these data points that you mentioned, and we're building toward, it feels like, the Fed meeting, which is coming up next week. And there's so much focus on that, especially as those other numbers are coming out. Right now, at the moment, it looks like everybody's looking for a cut. Maybe the question is, how big is it going to be? So let's talk about what you see coming from the Fed next week. And we can look at beyond that if you'd like to as well.
Sure. Well, September 17th Fed meeting is going to be the biggest one of the year, maybe the biggest one in a couple of years to me, because what has happened was the Fed was saying, November of last year, so call it, 11 months ago, 10 months ago, hey, we're going to do 4 cuts in 2025. Then after the December meeting, they're like, just kidding, 3 cuts. And then in the first half of the year, it was 2 cuts, and it became 1 cut, and the market, to me, has held up immensely well, given the fact that the cuts have diminished, right? We didn't see the Fed really show their hand until August 22nd again, when they were like, the jobs growth really isn't there. Inflation could go up a lot, potentially, based on the tariffs. We just don't know, because those numbers aren't into the economy yet. And we'll get an idea of that tomorrow. That's an important one. CPI is coming September 11th. PPI today was a miss. So I don't think it's going to be like a showstopper number tomorrow. And therefore, the Fed is probably kind of positioned already to what they're going to do. I don't know what they're going to do. This is one of those meetings where you could see them cut 50, you could see them cut 25. It's definitely going to be one of the two. It's more important as to what Powell says during his speech, because that's what people are going to be hanging on. The broad market here is very overextended. As we record this, as of August 31st, the SPY, which is the big S&P ETF, has a 45.41% weighting in technology. I mean, that is the highest I've ever seen, including 99 into 2000. I think it was like 30 back then. I mean, it was well overweight then, but 45 plus is crazy. When you add up all the companies attending Beaver Creek, when you add up all the companies attending Denver Gold next week, when you add up all the other juniors no one's ever heard of before, they don't even equal 1% of the market. That's the opportunity, is that when we start seeing real fund flows from portfolio managers outside of mining, right? Generalist investors, as we call them, that's what we're positioning for. We think that the earnings season we just saw, which was led by Newmont, they were the first to kick it off in July, beating by 27 cents, beating on revs. Agnico killed right after them. It just kept going like into August, and people started to really pay attention, to our sector. And the numbers that I just shared with you, August 1st and 22nd, didn't hurt.
Right. That was on my list to ask you, because we were talking about those upcoming gold producers results and what it could mean if we start to see interest from outside the sector. So for you are starting to see that come in at this point.
Yeah, so I'm here at Beaver Creek right now. I've met with, I don't know, 8 hedge funds and private equity groups just that came up to me after my speech yesterday, or I saw them at happy hour or something. There's a lot of generalist money here. I don't know what size these people are, but generally, like $1 billion to $5 billion is sort of that range. It doesn't take a lot to move a junior stock, Charlotte. You put like 100 grand, 200 grand on the bid, and it's going to move that stock because these stocks are illiquid for the most part.
Really good to get that on the ground perspective once again. And so if we look a little bit more closely at the gold price, so it is trading at all-time highs over the last couple of weeks or so at this point. And at least part of that, we know that gold has all these important underlying drivers, but at least part of that is because of these Fed expectations and the data that we're seeing coming out. So for you, when you're looking forward, I know you said you're telling people on stage this is not over yet, but what do you see coming for gold as we head into the rest of 2025?
Yeah, so as you know, we were, I think, $8 off our gold target last year. So we got some street cred for that into 2025. Our targets this year were 3,200, 3,500, and 3,800 on the high side. So now 2 of our targets are in the rearview mirror, which is great. I think more and more banks are coming around to this 3,500 to 4,000 narrative. I'm hearing a lot of people here talk 5,000. My partner, Don Durrett, firmly believes 5,000 gold is imminent next year. He thinks, $50 silver is not the number people should be looking at either, because that's not inflation adjusted. When we hit 50 silver last time, it was well over 10 years ago, right? So he thinks that the real target for silver is more like 68 to 70. And, in that scenario, 5,000 gold and 70 silver even, the gold to silver ratio is still very, very stretched by historical norms. And that's why silver is our largest position. We haven't added to it in probably like 5 or 6 months. We're just holding what we've accumulated. But as you know, we bought, 4 times, 5 times last year.
Yeah, I do remember you have a really strong focus on silver. And I think it would be interesting to talk a little bit more about what's going on with the silver price, because I think in our previous conversation, you'd mentioned, okay, once we get past that $40 level, which is kind of psychological for a lot of people, then we get into when it's go time for silver. So is that still what you're seeing here?
Yeah. So I would argue that 30 was the major psychological number, right? Because that was resistance for 11 years. Silver failed at 30 at least 6 times. I don't know the exact number, but I remember it was painful to getting through 30 in recent years. This year, we broke 30 like butter. 35 was your next major technical big round number. We broke through 35 quite easily. 40 didn't take much time either. And really, when you get through 43, 42, 43, there's really not much left. And I have to double check where we're recording this, but it's probably around 40 and a half, 41 silver. I mean, once we get through that 42, 43 range on a couple of closes, 50's in sight. And, we've been saying 50 by December 31st all year. So it's hard to believe seeing some of this stuff come true. You plan for these things, but to see them actually transpire is really satisfying, because I love seeing investors make money in our sector. And I think, they can do not only by buying the metals, but buying, gold and silver stocks as well.
And I think that's a perfect transition into talking about the companies that you're watching right now. Maybe we start with silver and then we can move over to gold and see what you're seeing in terms of catalysts there at the moment.
Start with silver. Okay. First, I'm just going to touch base on Mexico, because I've mentioned that on your show ever since President Sheinbaum came in office October 1st of last year. And now, I just met with some pretty heavy duty Mexican executives yesterday, and they're getting the sense that Sheinbaum may be getting more open-minded about permitting, which is obviously needed for some of these juniors, especially. Like someone like Agnico, it's not a big deal, right? It's not going to move the stock that much because they're a large cap. That's AEM. But for a discovery silver, that's DSVSF, Sonoro Gold, SMOFF, GoldGroup, I just met with yesterday, GGAZF. We own another one, Questcorp, QQCMF. So our biggest 3 positions right now in that region are all in the same state of Mexico, if you will, which is the Sonora state. Sonora state is the closest to the Arizona border. I'm very familiar with that part of the Mexican terrain because it's very open. Like there's not a lot of it's just desert, right? So like you're not going to bother anyone by building a mine, generally speaking, in the middle of nowhere. And I like that because you don't have to deal on the permitting side for like years dealing with wildlife and environmental issues, etc. So yeah, the three I'll just highlight real quick there. Sonoro Gold is SMOFF and SGO in Canada. I just talked to those guys, I guess like 3 weeks ago. I interviewed them and they were saying they're headed to Mexico in September and trying to push this over the finish line. I think it's going to take a few months, to see companies get their permits. But when you're this close, right, like a Sonoro could produce within 12 to 13 months after a construction decision. So let's say they get the permit today, it's probably 18 months to production, right? Like conservatively, it could be quicker. And that's like something Don and I talked about in our presentation yesterday is developers that are really close to production. That's really exciting because you get re-rated when you start getting your permits and moving forward, right? Another one is Questcorp, QQCMF in the States, QQQ in Canada. I just had dinner with them 2 nights ago. They are drilling La Union right now in Sonora State. And, their press releases have said we're going to do like 4 to 6 holes. But in a hot market, what the market doesn't realize sometimes is that companies are conservative when they're small, right, Charlotte? They only have so much cash. They're not going to go out there and do a 20-hole program and then, lever up and raise $10 million. Like that's not going to necessarily happen. But they could take a 4-hole program to 10. And if they start hitting on their first few holes, that's getting investors more excited. And I think that's where Questcorp could be headed is that they have, already put out 1 hole. I think they're going to put out the rest here by November. And in a hot gold and silver market in a hot part of Mexico, with Riverside as a partner who's been doing this 20 years, I think that's a pretty exciting opportunity. The other one that I just met with, as I mentioned, is GoldGroup, and that's GGAZF, GGA in Canada. These guys, I mean, I can't say for sure they're like a top 20 name for the year in terms of performance, but they're up hundreds of % already this year, and I don't think it's over. At 80 cents US, this thing probably could go to $1 US at some point in the next 3 months. I mean, it's got serious momentum. Eric Sprott, I just learned yesterday, came in for 14%. He never had a position before that. So you're starting to see big names come into a stock like that. And that's really when you start getting excited is that, the share structure is getting taken up by people that aren't going to sell even at 80 cents, right? Like they see the long-term opportunity. So that's Mexico. Let's move on to silver, like you asked. In silver, it's kind of a mix for me of developers and producers. The developer side is Aftermath Silver. I mentioned that every other time we talk because we've made people a lot of money in that stock on your show. We've mentioned it multiple times below 25 cents US, at least 4 times. And now it's trading at 57.5 US, but it hit 65 plus US not long ago, like a couple weeks ago. So I think you're going to retest that year-to-date high, which would imply a nice little move here. But more importantly, they have 140 million ounces of silver in the ground, and they have 99.9% manganese, and they have copper, right? So like they have a couple of ways to win, and Eric Sprott owns 24% of that one. Eric generally doesn't own more than 19.9 in a stock. So when I asked Michael Williams, the founder of Aftermath, is that unusual for Eric? He said, I don't think Eric owns more than 20%, and it's less than 10 stocks. So that should give investors an idea of what Eric thinks of Aftermath. And then lastly, in the silver space, I'd say SilverX is something that's catching my eye because it's breaking out on really good volume here. That's AGXPF and AGX in Canada. I spoke to Jose briefly like a week ago. They're their numbers that they just posted, kind of like when I looked at some of the comments out there online, it wasn't like a blockbuster quarter, but what people don't understand, I think, is that the ASIC, the all-in sustaining cost, let's say it's between 25 and 28, right? Like it's not the lowest cost producer by far. But when you're at $40 silver, it's a big difference than $30 silver. I mean, every dollar that silver goes up, something like Silver X just gets huge leverage because these guys are a small, high-cost producer, right? But there's a lot of growth potential at that in Peru for them, and I think the market's missing that as well. So people look at the chart and say, "Man, that move was pretty extreme here." But you need to look at longer term charts, like look at a 5 or 10-year chart, and you'll see this is not like the stock is making all-time highs. You're still seeing some value in a stock like that.
Okay, great updates there. So we've got Mexico, we've got silver. I know you talked a little bit about gold companies as well. So I'll ask if there's anything else you'd add on the gold side, or also we usually talk about those interesting special situations companies. So any further updates on the company side you would share on those angles?
Yeah, sure. On the gold side, I don't remember if it was on your show, but I definitely mentioned Mandalay a few times. And that has become Alkane Resources now, which is ALKEF in the States. The stock is still very cheap. They just went through a merger, and Alkane was a Aussie company and Mandalay was a company with 2 producing mines, right? What Mandalay brings to the table is a tremendous balance sheet. They had over 100 million US cash when the merger happened and 0 debt. So I don't think the market really figured that out yet. They also haven't figured out for sure that they're the largest North American antimony producer. So, I spent a lot of my time in critical minerals, and that got me really interested last year. And I met with the then CEO, Fraser, in March. And I was like, man, this thing seems like a slam dunk. They just keep, generating free cash flow, and they are committed to no debt. And so we started a position then. We'll probably add to it, here. I'm actually meeting with them in a few hours with the new CEO. So I'm excited about that. What else on the gold side for guys and listeners here? Let's see. Yeah, so I'm meeting with 1911 Gold, which is AUMBF and AUMB in the Canadian region. Sean, you look at that chart. I mean, it just took a little bit of extra waiting time for that stock to ignite. We didn't talk about it on stage yesterday, but I am meeting with 1911 later today as well. So, I think they are probably less than 2 years away from production. So, very exciting there. You've got Mandalay producing, you've got 1911 very close to production. We already mentioned things like Sonoro close to production. One that, isn't really, I guess, close to production at all, but is getting funded by a major, is Inflection Resources, which is AUCUF in the States and AUCU in Canada. What's interesting to me, Charlotte, is that when you look at their news, their news has been decent. Anglo, as their big partner, greenlighted, I think, 3 of their properties a couple months ago. And in talking with the company, they were going to be pretty pleased with 1 or 2 of those being greenlighted. So the stock has actually gone down since then pretty dramatically. So it's trading at 15 cents US. Literally, I just bought some more in full disclosure today. But it's like in a hot gold market, at some point, this will figure itself out. It hit 28 to 30 cents US twice last year, if you look at the chart. So, that's 100% almost from here. I just don't understand. And I don't see really, the only thing I could see there is that they might need to raise a little cash. But again, when you're getting funded by a major, that takes a lot of your drilling costs completely out of the way. So that's it for gold. On the special situations front, I've given you guys Guardian Metal before, which is GMTLF in the States, and they don't have a Canadian ticker. It's a London ticker, actually. It's GMET.L in London. I got interested in that story in the end of 2023, and it's been a home run for us. It has now grown to our biggest equity position, and I don't see a reason to sell it. Basically, they got a $6.2 million DoD check from the U.S. since we last recorded, and they also concurrently announced a $21 million financing as a little junior tungsten play in Nevada. That like really opened up some people's eyes. The stock exploded on huge volume coming out of that news. But then just a couple of weeks ago, they went out there and said, oh, by the way, that billionaire we brought into our financing, that's Stan Druckenmiller. Stan Druckenmiller is like a legend in gold. And I believe, I'm not 100% on this, he owns about 15% of the company now. So again, when you're a billionaire, you don't need to sell this stuff. And that just locks up some more of the share structure. So I think they're doing a really good job of advancing things there. And tungsten is near an all-time high. Lastly, there's another London-based company that I've been buying just a couple weeks now because I don't know much about helium and that market, but I've forced myself to learn because they're in Montana near a couple of my other stocks, and they're going into production in a month. And so like great timing, because the U.S. market, everything U.S. is so hot right now with Trump's, executive order starting in March. But these guys have brought in some serious shareholders as well, and they did their last financing and went one day. So that one's flying under the radar. It's HHEXF in the States, and it will start to do some more marketing, I think, once they begin production, which again should be October.
Okay, always really good to have those updates. And I should have said this earlier, but we will have all the tickers and company names in the video description in case people want to find them. I know we always have questions asking, so they will all be there. And I think I will let you go back out onto the show floor at Beaver Creek unless you had any final thoughts you want to leave investors with right now.
Well, the only thought I would leave, I've said many times before, and I'll say it again, because it keeps ringing true. You have to make a decision to work with professionals, and those people can help guide you through this market. It is getting to be a different type of market, Charlotte, than when you and I met, I guess 4 years ago. 2021, 2022, 2023, tough years for mining investors, right? This wasn't like a real walk in the park. Last year was an improving situation. This year is like off the charts good. Next year is going to be off the charts good. You want to get positioned now with someone like myself who understands this market, who has, I don't know, gosh, I'm getting old, like over 30 years of experience. I hate to say that out loud. My daughter's going to make fun of me, but, it's basically like, it's a tough sector to really understand. Don and I were saying this on stage yesterday. I mean, Don has written a book on gold and silver stocks. It's probably the most notable book out there. And he started 21 years ago. And his comment to investors on stage yesterday was, hey, I got my, what kicked when I started my first couple of years. I didn't know what I was doing. And that's Don Durrett saying that, who's just got ranked the #1 equity analyst at seekingalpha.com, literally for year to date through August 31st of this year. So, I mean, Don's come a long way, right? But Don wasn't that way when he started in his first couple of years. So if you're listening to this and you are interested in like gold and silver's ascent, but you don't know how to play the equities, you need to work with people like us. I mean, it's really not a lot of money. We don't like tie people down, Charlotte, as you know, with 12-month like minimums in terms of our services. They can join for 3 or 4 months, see if they like it, and move on to someone else. I mean, we don't have all the answers, right? But I will say this. I just announced my 2 U.S. conferences, and tremendous response this week. I did it strategically over the weekend, pre-Beaver Creek in Denver. We already are 60% full at the company level in Florida. We're about 25 to 30% full in Washington, D.C., but we're starting those May 17th through the 19th of next year. We'll be Washington, D.C., and then May 20th through the 22nd, we're back for our 3rd year at the Four Seasons, Fort Lauderdale, Florida. So we've got a lot of investor interest as well, which is great to see. we encourage people to contact us if you're close to those markets. And if you're an accredited investor and you're buying stocks actively, we may be able to waive the fee for you to come in.
Okay, wow, so much to look forward to and a lot going on right now. So I'll let you go, but thank you so much for taking the time to come on and talk about what's going on in gold and silver and the resource sector as a whole.
Thanks for having me, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.